Well, let's talk about the pharma company Lupin because they came out with its earnings. We have the management joining us on the show. Vinita Gupta, the CEO, Nilesh Gupta, the MD, as well as Ramesh, Swaminathan, the Executive Director, and the CFO joining us. Thank you everyone for making time and speaking with ET now. Vinita wanted to begin by discussing with you the performance that we saw in the last quarter was largely in line with street estimates on the top line. Going forward into FY25, what's the expectation? Is it expected to be better? More of the same? What are the factors at play here?
Fiscal year 24 has been a tremendous turnaround of our business with margins improving quarter over quarter and really solidifying our business on sustainable products going forward. So as we look at fiscal year 25, we feel confident of growing our business double digit, as we mentioned, on the back of our two major markets, India and the US in particular, but also other regions that are at a smaller scale and have got more headroom to grow. So on the revenue front, we feel pretty good about the prospect of growing our business double digit. And on the EBITDA front, we feel, very confident of sustaining the 20% plus EBITDA level throughout fiscal year 25. On the profitability, again, of our two key business drivers, again, the US, where the profitability has improved substantially in fiscal year 24. And India, which has got a very strong margin profile to start with and continue to build operating leverage as we grow our business. So that plus our continued efforts on driving efficiencies give us tremendous amount of confidence to continue to grow our business on a profitable basis in fiscal year 25.
Vinita, can we have a little more specifics on the margin outlook for FY25? You mentioned 20%. Is it the full year 20% for the full year FY25? And should the margin improve to 23% in the second half of FY25? Is that a possibility? Can you help us with some range?
So we have shared that in the next 2 to 3 years, we would expect the EBITDA margins to get to the 22-23% level. In the near term, we're continuing to invest on the R&D front in, our complex generic platforms, in particular, driving the inhalation pipeline further into the products that we have targeted, plus injectables, accelerating our injectables portfolio. So we expect our investment in R&D to go up as well in fiscal year 25, and still sustain the 20% plus EBITDA margins for the year. As we look at rolling out our, pipeline and continuing to grow our business in India, US, plus other regions, we would expect to get to that 20 to 23% level in the next 2 to 3 years.
Okay, that's good to hear. But, Nilesh and Ramesh, before I come to you, let me just finish that part of the conversation with Vinita. Vinita, the other thing that we have been reading of late is the fact that the US price erosion is settling a bit. There is that big drug shortage that US is kind of dealing with as well. But despite all of that, your US revenue were a bit mixed. Help me marry the two as to what do you expect the US revenue growth to be like from here on?
Yes, actually, it was a really strong quarter for us. We had some impact of seasonal products. So, the flu season products, including albuterol, has, declines with the drop in the flu season. So we saw that impact quarter over quarter. But we continued to grow tiotropium. We also benefited from the drug shortage opportunities. We had a couple of products where we were able to really help serve the market, that we had not anticipated, thanks to a supply chain, resilience. Darunavir, which saw additional competition in the last quarter, We certainly saw decline there as anticipated. But overall, the quarter came in ahead of our expectations, and also at a profitability level that was better than Q3.
Right. Nilesh, as far as your momentum is concerned, the India business momentum we are talking about, it has performed in line with the IPM. Can we see FY25 and 26 growing better than IPM, and is that happening on a sustainable basis?
So we, adjusted for one-off, we grew at about 25% ahead of the market. And our goal, as we've stated in the past, is to grow 30% ahead. So, somewhere within that 25-30% range, we would expect to go. The market has been a little sluggish, as you would have seen, including in Q4. And therefore, the growth rate in Q4 has been less than what we would have liked it to be. But we do expect it to pick up. We're already seeing a nice bounce back in April. So we'd certainly love to get back to the double-digit kind of growth for us, backed by reasonable growth in the market itself. Our big therapy areas are doing well. So in cardiology, we're well ahead of the market. Respiratory, significantly ahead of the market growth rate. Diabetes has been a challenge in the past. Now we're close to market growth. Again, in FY25, we would expect to grow ahead of the market in diabetes as well.
Okay, Nilesh, that point is taken. But Ramesh, wanted your sense as well. The gross margins have improved 1.5% on a sequential basis. What do you think was the key driver there? And what about the growth outlook from here on?
I could take that on. Essentially, there's, of course, the buoyancy on the top line and the sales mix, which has contributed. Apart from that, you also find some tailwinds when it comes to, in fact, input pricing. And we also had a higher inventory that we took on. And all of this, despite the fact that freight rates have been a little higher because of, in fact, the Red Sea issues and the like. So I would really attribute this to, real operational, the kind of focus that we had on bringing down the overall cost, which is essentially coming in from alternate vendor strategies, routes to synthesis and the like. It contributed tremendously to, in fact, the overall gross margins expansion.
Vinita, were you been able to gain market share in your Spiriva drug? And also, how much market share target do you have for this important drug for the full year, the new year?
Yeah, so we had expected to be at the 30% level in the first 12 months, and we are there right now, 10 months into the launch. So feel pretty good about our position in Spiriva, and we'll continue to assess as we look at the next couple of months. The brand has also announced that they're going to change the out-of-pocket cost for the patients. We will continue to monitor it and determine if we need to really change a strategy. But otherwise, we'll build upon this 30% share that we have established so far.
Sure. What on the Spiriva generic also, Vinita, because the volumes have reduced a bit given the innovator has been shifting patients to Respimat also, if I'm pronouncing that right. What's the expectation going forward from this drug? Are you kind of bringing it down or scaling it down given the competition?
Yeah, there's been no real change in the competitive landscape or, the brand and the shift to Respimat has continued on the same trend as before. So there's no real material change.
Vinita, what are the plans to expand Lupin's diagnostic business? There's a lot of action happening in that side of the business in the industry. What are Lupin's plans there?
So we have a clear growth plan. Our aspiration is to be one of the top 5 players in the next 5 years. But there's a long way to go on that. We would go deep in the markets that we exist. Lots of stuff happening there. Still very small in the bigger scheme of things. Obviously, our main focus in India remains the prescription business. But this is a nice opportunity. I think we're well recognized as a trusted player in this space already. And I think that's a great platform for us to build on.
Okay, on that note, Nilesh, Ramesh, as well as Vinita, we let you go. Appreciate you making time and speaking with us today on ET Now. So that's the management of Lupin. It was a good show coming in from the company, at least on the revenue front. The margins were better than expectation as well, and the management clearly quite hopeful of the next year growth to be quite strong.
If you like this video, then like, share and subscribe to ET Now.